All right, another week in the books. Big week, by the way. Big week. Lots happening this past week. So I want to run through them. Got my notes here. Going to run through some changes that are happening in the mortgage world that may affect you or will affect you if you're looking to purchase or even refinance. Number one, fintech. Fintech companies, Open Door, OfferPad, Redfin, Zillow Homes, no longer buying homes. So if you're under contract with them, or you've made an offer, you're considering an offer that they may have made to you, and they're not doing it anymore. This is a good thing. Reach out to a realtor. Realtor is a better deal anyways. I hated the fintech companies. If you know me, heard me talk about the fintech companies, I think they were bad business to begin with. Kind of shows that they're out and exiting the market so soon. I keep getting asked, how low will rates go? Well, I don't think rates are going anywhere in the next year and a half. In fact, I think they're coming down a little bit. They kind of have to. We're entering into a recession. Let's face it. I mean, this is really a big deal. This coronavirus thing is going to affect the economy big time. Federal Reserve's is injecting a bunch of cash into the financial system. And so we're in a recession. I mean, there's just no way out of it. Now, we may come out of it very quickly, and I think we will once things start to happen, but it's going to take some time. It's going to take some time, and that's why I believe the interest rates are going to stay low for quite some time. In fact, I think rates, I think they'll come down here in the near, say, 60 days or so. I think once the bond market and the mortgage-backed security market, in particular, mortgage-backed security market kind of calms down and gets stabilized, then rates will come down. Now, we've got another wave coming right now, and that is this whole thing you may have heard on the news about the forbearance on mortgage payments. How many months? 6 months. I've heard as high as 12 months, as low as 3 months. That could be problematic for the mortgage world. So I'm going to be curious to see how that plays out and how lenders interpret that. The servicers, I can tell you, aren't going to like that. And even the banks aren't going to like that, because if we're making a loan, and that bank is going to say, well, if I know that this person isn't going to have to make a payment for 12 months after they purchase a home, that's lost revenue for the bank. So this could be problematic. So we'll see how this plays out. They haven't really given a whole lot of direction on this, and it wasn't part of this, $2 trillion stimulus package. So it'll be interesting to see how that plays out. Non-QM lenders are non-existent. They're out. In fact, I had a client this week who was getting ready to sign his final paperwork, and the bank or the lender came back and said, hey, sorry, we're not doing this deal anymore. We're folding shop. We're closing doors. We're going to circle the wagons. We're going to see how this plays out. So a little disappointing, obviously, for that consumer, but we're working hard to try to get him replaced with another lender to see if we can get something worked out for him. But non-QM, now to reiterate, non-QM, that is any loan that doesn't fit the traditional box of Fannie Mae, Freddie Mac, VA, USDA, FHA. These are lenders that are self-employed typically, that have bank statements and things like that on they use bank statements or that for their income, and don't fit the traditional box. So good paper, a lot of good paper in there, but no longer doing those type of loans. Okay, appraisal. Fannie Mae, Freddie Mac released earlier in the week appraisal guidance and verification of employment guidance. And I've got a slide here I want to kind of pull up here and show you here. So here's a cut from Fannie Mae, Freddie Mac on their guidance on appraisals. Fannie Mae in particular on this one, but Freddie Mac follows Fannie Mae pretty much. So on purchase transactions, traditional appraisal, desktop appraisal, or exterior appraisal. Now, it's important to note here that all lenders haven't necessarily adopted these matrices, or this matrix, I should say, from Fannie Mae. So lenders, if you're watching this, you need to check with the lender that you're placing this with, mortgage brokers, I should say. Mortgage bankers, they may have their own internal guidance as to how they will handle appraisals. But this is Fannie Mae's guidance on appraisals. So purchases, an exterior drive-by appraisal may be acceptable. Limited cash out refinances, just your rate and term refinance, if you will. An exterior or drive-by appraisal is acceptable. Cash out refinances, right now, looks like you need a full appraisal. A lot of people are saying, hey, Jason, I don't want somebody in my house. Don't want an appraiser walking through my house. I'm in self-quarantine right now. I don't want an appraiser in my house. So, be aware of this guidance. Now, again, all lenders aren't accepting this guidance. This is from Fannie Mae, Freddie Mac saying what they will accept, but some lenders may not accept this guidance. And then the last thing I want to go over, which just came out on Thursday, well, it started on Wednesday actually, but really started to show itself on Friday, and that is FHA, VA government loans, USDA. The lenders are starting to circle the wagons on these loans, starting to raise the requirements, raising the FICO score requirements, if you will, and lowering the DTI requirements, or ceilings, if you will. So right now, a lot of lenders are adopting the 640 credit score. So that means you need a 640 credit score in order to get an FHA loan. So if you're at a 605, 610, but anything below 640, some lenders aren't accepting those loans. So if I were to give you some advice as a consumer or a realtor, if you are working with a lender, have this conversation with your lender. Super important, because I just got a customer yesterday that a mortgage banker said that he could not do because his credit score now is 640. Now, the thing that was really kind of misleading in that is that mortgage banker told the realtor that it's a across-the-board 640, Fannie Mae, Freddie Mac, not accepting anything, or excuse me, FHA, VA, not accepting anything below 640 credit score, and it's nationwide, and that's that. Nobody can do it. Now, that is a lie. Fannie Mae, Freddie, or I don't know, I keep saying that, but FHA, VA have not changed their credit score requirements. This is an overlay that lenders are starting to put in place because they're a little paranoid about, the potential unemployment and some of the other factors that are going on with this coronavirus, surrounding the coronavirus. So that mortgage banker only knows what they know. I'm not saying that mortgage banker lied to the realtor. They only know what they know, but that's not true, because I got the deal. We got it placed yesterday. I've got a lender who's going below 640 credit score, but I suspect in the near future, a lot of lenders will start adopting the 640 minimum credit score requirement. So be aware. Be aware. Have a conversation with the loan officer. So a lot has unpacked here this week. Sorry, it's a little bit of a long segment here, but super important that we get this information out there to keep you better educated about what is happening. It's an ever-evolving mortgage market right now, and so stay up to date, stay in conversation with your loan officer, and keep things, relevant. Don't sit by the sideline. Try to stay informed as best you can. All right, well, that's it for now. I'll see you next time.